Welcome back to Uncontested Investing. I'm Tim Harris. Thank you so much for swinging back by. You will notice, if you're watching online, I'm still in Austin, Texas, with the beautiful, greatest capital in the world, the Texas State Capitol behind me. And today I am joined by Chuck Hattemer, co-founder, Poplar Homes. Chuck, thank you for being here.
Yeah, thanks for having me, Tim. Pleasure.
I'm glad we got it worked out. I know you and our partners, REI Eat, do a lot of business together. And we got lucky enough to kind of align the stars and get everybody in the same place at the same time. So I'm glad you're here. Take a minute and just tell the audience a little bit about yourself.
Sure, yeah. So I'm Chuck Hattemer, co-founder and CMO at Poplar Homes. We are a nationwide property management and technology company. So we're all third-party management. We're about 15,000 doors across 17 states. Got started in 2014 as undergraduates in the San Francisco Bay Area at school, and started with a online leasing platform for off-campus rentals. Ended up leasing about 90% of the inventory through this platform, and quickly realized that off-campus housing, student rentals, was a short revenue cycle business to be in. All your revenue comes in at once. So we expanded into full service management at that point. And today, like I mentioned, about 15,000 doors. That's made up of about 9,000 SFR rentals, largely retail investors, and 3,000 multifamily, and then 3,000 HOA. So that's where we're at today.
You're one of those HOA managers?
In a small way. Our businesses will always be focused 60% or more on SFR.
I was about to say, I'm going to end this interview right now.
Yeah.
Unless you're all about putting HOAs out of business. No, I'm just kidding. We won't make him answer that, but you know my problems with HOAs. So, Chuck, no, they're the best, right? You got to say that because you're the manager, right? Oh, the ones that Chuck manages are the best, right?
Right. That's the way.
They follow the rules. They don't discriminate. They don't attempt to steal your property rights like, I don't know, all of my HOAs. So
there's San Diego HOAs, and everything in California is the friendliest. So
yeah, I mean,
they're the best. They're the best you can get.
You might as well just be a rubber stamp at that point.
Right.
All right, so first segment every week is what I call the bottom line up front. When I was in the Marine Corps, we learned that when you're briefing the general, you give him the most important thing up front in case he needs to get up and leave. So same thing goes here. Up to 2 minutes, I want you to talk about things you think investors should be they should be focused on, things they should be doing, things they should be avoiding, trends that are developing. Really just, you got 2 minutes. Hit them in the face with the cliff notes. You ready?
Sure. Start the timer. I don't have a watch, but I'm ready.
I'll watch the timer. Right. You get ready and go.
Yeah. So as a real estate investor, I think the biggest thing to focus on right now is a lot of the regulatory impact that you're facing and kind of the types of assets and business that you're running. So, we work specifically with long-term single-family rentals, and I think there's definitely a sort of interest from long-term rental investors to dabble in short-term rentals as another diversification of their revenue streams, which can be a high-margin, high-revenue business if you can maintain good occupancy. But, the regulatory struggles that short-term rentals are facing in a lot of places, you look at somewhere like Las Vegas where, they just reduced the amount of short-term rental permits significantly. You have a big push from local communities to control this type of inventory. So your risk goes up greatly as a short-term rental investor. And I think that's just something important to consider because it can be very, attractive to see, 20%, 30% higher revenue in vacation rentals, but that could be turned off with the flip of a switch. And it's not like a Uber taxi situation where you can just continue driving your car and Uber will pay your fines for you and figure it out. Airbnb, these short-term rental platforms are not doing that. They don't want to be in the asset-heavy business. So I think that's a big area for a lot of long-term rental investors who are looking to get into that. The other thing that we're seeing is, as interest rates at this point are hitting, 7.3%, lowest month for mortgage applications, I think, ever, and we are reaching a point where, there's the institutional investors are pulling back. So I think retail investors, you can look at that in two different ways. One is, if you're a mom and pop investor who's got a portfolio of properties where you've got great rates on it, consider if you feel a reason to sell, consider holding on to that property and continuing to rent it out. That is a valuable asset and mortgage. If you've got a sub 3% mortgage or, anything like that, that's an opportunity to actually continue to cash flow that property. And also where institutions are pulling out of markets, institutions are very heavily focused in some of the Sun Belt markets, Smile States. If they're pulling out, that might be an opportunity for a retail investor to come in and have a little bit more leverage in acquiring properties. So I think these two areas, the short-term rentals area, the kind of impact of current interest rates, are areas that retail investors should be looking very closely at. And I think I hit my 2-minute mark right there.
Okay. So, Chuck, what is a mom and pop?
Mom and pop. Well, yeah, so in my business,
I'm messing with you.
Okay.
It's going to keep coming too. So, 10 years ago, I helped Blackstone start B2R Finance.
Yeah.
And I sat in these rooms with these people that just frankly wanted to change all the terminology in the entire industry and start labeling everything the way they wanted. Before that, for about 50 years, SFR meant single family residence. Now, SFR, we want to make it mean single family rental. Mom and pop is referred to, you didn't do it. The industry, though, sometimes it's a bit of a negative connotation, and I find it amusing since they own 95% of the house.
Right.
So those of you out there wondering what a mom and pop is, the overwhelming odds are it's you. But then you said retail investor to differentiate between institutional investor. And just so the audience, all the vernacular is the same, when you say retail investor, you're referring to mom and pop. And when you say mom and pop, you're referring to not a large institutional buyer.
Right. I think the terminology, whatever the current definition is, I've only been in this business for about 10 years, so I'm probably starting with the new age vernacular. My understanding is, once you reach about 250 doors, that's at a point where you're going to start building out more of a team and turning yourself into more of an institution.
I'm going to have fun with you, Chuck. So when you say doors, you mean cabinets, garage doors? Are we talking about French doors, screen doors? Like,
well, when I tell my friends,
units, like, what are we talking about?
I'm talking about a rental unit. Okay. So it could be a door, which is, I tell my family, oh, we're at 15,000 doors. We're paying, this much for a door. And they said, well, I can go to Home Depot and I'll get you to 100 doors right now.
Yeah, and you get you a $99 steel door if you're paying that much a door.
Right. I mean, there you go. So
on a credit card, really arbitrage a lot of it.
A door is a rental unit, so that could be a single apartment in an apartment building. It could be a condo, a townhome, or a single-family residence. So when I say institution at 250 doors, that could be 2 apartment complexes at 125 apartments each. That would be 250 doors. So that's where I see the differentiation from a mom and pop or retail investor from a institution.
So for the purpose of this conversation, just so I'm on the same page, if we're drawing the line at 250 units, so now those of you out there wondering if you're a mom and pop, 98% of you are.
Right.
Right, because there's not many people that own more than 250 properties or units, which is probably why you said that you specialize in catering to the normal human being out there.
Yeah, right. I mean, 17 million, there's 17 million single family rentals in the U.S.
Is it 17 now?
That's the number I heard. There's 10 million people that report rental income on their taxes. So, yeah, and that's one of the challenges I think with being a real estate investor today is, if it's something you're building a business around, the narrative in the industry is there's all these large institutions that are coming in and pushing out, the average Joe home buyer. But you got to remember, if you put together all the largest real estate investment trusts and other large institutions that own properties, that's still going to make up less than 5% of the market. Right. So that's our whole vision at Poplar is all about empowering the retail investor. Our average client has 2.5 units. And what we're all about is how do we, give them institutional operating power. What I mean by that is, lower cost on maintenance, higher productivity on leasing, lower vacancy cost, all because we have a nationwide operating base. And as an owner with 2 properties, you can come to us and you get that kind of nationwide operating power.
I love that. And, to talk about narratives, a lot of times the media will say that the large institutions and real estate investors are stealing people's ability to own homes. And I find it comical that if you really look, Blackstone via Invitation Homes entered this space in about 2012. Really like heavy. Home ownership bottomed out in 2016, the home ownership rate. As we stand today, it's at around 66 or 67. I can't remember, but it's higher than 2012. It's higher than 2011, and it's higher than 2010. Now, it's not higher than 2007 when we were oversupplied in homes, and it was like the Oprah Winfrey show. You get a home, you get a home, you get 2 homes. It just, maybe we don't need to go back there. But the whole point is like the math, as I say, the math don't math, right? The home ownership today is strong in America. People that want to own a home find a way. And more Americans own a home now as a percentage of population, the home ownership rate, than I would say 90% of our history. I feel like we're doing good. I want to dial all the way back. You said you were at a California college doing off-campus housing. Which college? And tell me about that.
Yeah. So, I mean, I think a lot of these coastal markets and cities define that narrative of struggle for home ownership, and it kind of gets applied across the American population. But you're right, it's increasing. It's just you may have to move, believe it or not. So we started in 2014. We were undergraduates at Santa Clara University, which is just south of San Francisco, and right in the heart of Silicon Valley. And essentially, we got into the business because we were having a really difficult time renting an off-campus house. There was property managers who managed most of the inventory around the school we were attending. We had a property manager, rent us a house and tear up the lease in front of us and say, well, the owner decided he's not renting this house anymore. So we kind of approached it actually from the consumer, from the renter perspective first. And it was a problem that all of our peers were talking about. It was top of mind issue, and it was painful. And that was sort of the ingredients that we saw for, hey, why isn't there a technology more prevalent in this industry, and how can we use that technology to create a more empowering, fair, and productive process for all parties involved. So our first platform, like I said, is a leasing platform. It was actually a rental bidding platform because we were trying to essentially replicate what was happening offline.
Right.
As you can imagine, a lot of
So as soon as you were in charge, you wanted to let the bidding continue, right?
right. But it wasn't very popular. We had a lot of friends in college that weren't super psyched about turning the bidding online. So
why make it easier for the landlord to bid us up, man?
Right.
Why are you doing that?
Exactly.
Right? All right, cool. So then from there, I'm a data nerd, so I'm guessing you're a bit of a tech nerd.
Yeah.
You went to college where you went.
Yep.
So you said, what the heck? I don't like bidding up off-campus housing. Why not manage houses for other people? What was that turning point that kind of led you to where Poplar Homes is today?
Yeah. So what we were doing is we were driving, knocking door to door at property manager offices, bringing them the software and saying, hey, do you want to use this to take tenant applications and sign leases? And they're like, oh, yeah, great. I like this software, but can you change, X, Y, and Z? And also, by the way, I don't really want to pay for it because I'm paying for this other property management software. And so when we turned around and talked to the individual real estate investors and homeowners, they were much more eager to pay for services, and they wanted more services, maintenance, leasing, all the offline components. And if you think about 2014, that was sort of the era of like Uber for everything, right?
Yeah.
And there was not this in the real estate industry that we saw. So we figured, okay, instead of selling software to property managers, why don't we just become the property manager and sell directly to the homeowners? Because that's where the pain was. Property management was sort of this black hole. We saw, okay, in the U.S., 70% of rentals are independently managed or self-managed by their owners.
Which, I got to stop you. You got to be a moron to want a tenant to know that you own the house and have your cell phone number.
Right.
Like, still to this day, if I have to go by one of my rentals to look at something, I'm like, hey, I'm Tim. I work for the landlord, and I need to come check this out.
Right.
And when they're asking me questions, I'm like, ma'am, I don't know. I mean, I'm just here to, the landlord told me to come look at the AC, and that's what I'm doing, right? And then it's fun for me because then they start opening up. Like, well, this landlord won't fix anything, and this is wrong, this is wrong. And I'll call my property manager and be like, hey, can we kick this person out? Like, I mean, they're tearing the house up, and all they do is complain about what you didn't do when I know it didn't look like that when they moved in. So I love property managers. It was a glorious day, the day that C.J. McClendon moved out of 5815 Phoenix Street in Dallas, Texas. Right? Because he was the last one that knew who I was and had my cell phone number. And since then, now I run it like a business, right? I get monthly statements, I get P&Ls, I make decisions. I love it. We're going to take a quick break, and then I want to get back to something you just said, the services and products that customers want and how that customer-driven model kind of is working in property management. So stick around. We'll be right back. At RCN Capital, we know that time is money. With our competitive rates and quick turnaround time, you can receive funding in as little as 10 days. We offer flexible payment plans to relieve the pressure of repayment process. Our team is experienced in making sure that you choose a loan that will suit you best. Get on the phone with the loan officer today by emailing info@rcncapital.com or clicking the link in our bio. Welcome back to Uncontested Investing. Tim Herridge. I'm still here with Chuck. And Chuck, I'm impressed. You started off talking about mom and pops and retail investors. I thought, man, this guy's got no clue. But now you're talking about what the customer wants, right? So many businesses, they design what they want. And then, why won't this customer buy it, right? Like, I made this thing that I love. Why won't you take it from me? Would you talk a little bit about your customer discovery journey? What drove you to really want to solve their pain points? And then maybe share with us kind of like across your 15,000 unit portfolio, like what you hear from the customer, like, oh, I love this, or I hated this. Like just some, I don't know, spend about 10 minutes just like giving us tips and tricks on how to be better landlords.
Yeah. So customer discovery was kind of part of our DNA from the very beginning. In Silicon Valley, you're constantly inundated with sort of these frameworks and methodologies for finding product market fit. And at the end of the day, it came down to us quite literally putting our ideas on paper, going into coffee shops, or when we were students in college, the library, interrupting our friends who were studying and putting this stack of papers in front of them. And we had drawn out, what we thought this technology product would look like. And we said, hey, I know you got your, Econ 101 test coming up, but can you take a moment and just show us what you would do with this product? And we'd have them, pretend to click the buttons and move the papers around.
Really?
Yeah. And that was all about not building something until we knew what people wanted. And the same thing, we actually won our first client, a property management client around the university, by building the website in PowerPoint. So we used Microsoft PowerPoint and made what looked like a website, and you could click on buttons, but it was just a PowerPoint presentation.
It was kind of like a mock-up.
Yeah, it was a mock-up. And that was all about this philosophy of don't over-optimize and don't build before you know exactly what the customer wants and what the pain points are. And so that's, and then, once we got into property management, we were doing all the property visits. We had multiple properties. We had to show up with baseball bats outside this $9,000 a month Palo Alto, California house, where, the tenant had used a fake identity to rent the property, and we had to basically try to do an eviction. And
baseball bats?
Well, my dad always told me to keep a baseball bat in the back of my car when I got
like your dad.
So he knew. He was in, residential lending and for years. So
I keep a steel pipe in my truck.
I
keep a steel pipe in my truck.
There you go. That's a little more
stray dogs.
I'm a Louisville Slugger kind of guy.
Amen. All right. So now you're doing evictions and you're doing these PowerPoint demos. Please continue.
Yeah. So it was all about kind of immersing ourselves and getting our hands dirty in the business, to figure out what those customers truly cared about, and then building that into our workflows as an operational business, and kind of extending this idea of like, don't over optimize, don't build before you know what the customer wants. We always do things with people first and identify what are those repeatable processes that our people are doing that we could then turn into technology.
So if you can't see me, listen. Because these repeatable processes, whether you're a property manager or you're a house flipper or you're a wholesaler or you're just a landlord, like no matter what you do in this business, that's the learning point, right?
Mm-hmm.
The learning point is figure out what needs to be done, then figure out the repeatable processes, and then please continue.
And then build scale into your business, whether you're, buying technology or finding just dynamite people and rock stars to be on your team. Identify those repeatable processes, hand it off to the tech or the people to scale that up. A lot of what was missing in property management was this access to information. As a landlord, you got to pick up the phone and call your property manager.
Drop the mic, Chuck.
Every time to get details, right?
Yeah.
So why can't you, our whole thesis is, why can't this information, everything that's going on with the property, live in your pocket on your phone? Why can't you pull up and see, your occupancy rate, upcoming leases that are going to be up for renewal, be able to see all the details of your maintenance work orders and how your property manager is performing on those. So our whole idea, which still lives on today, is, can you turn managing properties into a similar experience as managing your stock portfolio and other investments? You can, to a certain degree. Of course, the physical offline nature of real estate means there will always be that service layer, but that is, you say you're a data guy, Tim. So there's so much data that's collected in that offline experience that historically has not been turned online.
Right.
So we're all about digitizing all that information and data and putting it in the property owner's pocket. So that was for us, when we talk about kind of customer discovery and pain points of landlords, oftentimes it comes down to that is I want to know what's going on in my property. I want to make sure the check is going to be coming in on time and that this place is taken care of in a professional way. So that's kind of guided our whole thesis around everything we've built and developed.
Wow. I mean, like, I'll tell you one of the things it always bugs me. Specifically, I would say 90% of my holdings are in the Dallas-Fort Worth area.
Mm-hmm.
Air filters. Mm-hmm. It just bugs me because this time of year, I know my ACs are running 12 to 15 hours a day.
Mm-hmm.
And if there's, and when that's happening, if that filter's not changed every 30 days, it's maddening. And I try to find a way to get them changed. Then I try to find a way to, did you set the appointment? And then it's like, wait, now I need to have my guy talk to the property manager and arrange for my guy to go to 20 houses. Now I got 20 tenants I need, it's hard. And I love that you said I'm bouncing around that because you get me excited. One of my friends, Kent Clothier, said something. He said, in the absence of information, everyone assumes the worst case scenario for themselves, right? If I'm not hearing from you, I don't assume you died.
Mm-hmm.
I assume you took my money, right? Like, I don't really care about you. It's like, it's me. It's, oh my gosh, I don't know what's happening with that house. It must be vacant. Oh my God, I don't know if they paid or not. Oh, it must be an eviction, right? Like, oh, they trashed it. Oh, and so I love that you're trying to take that offline data and get it online.
That's what, a property manager, those things you described are exactly why you hire property managers to not feel that way, right? So if you hire a property manager and you're still feeling that way about your portfolio, you have not fully leveraged your money to take power, to use it to have power over your time. Right. The intrinsic value of money is to have power over your time. Great quote out of the Psychology of Money by Morgan Housel book. And that's what property management is all about. It's taking, having more power over your time and de-risking real estate investment. That's what you want to evaluate a property manager for, is are they de-risking this portfolio that I have?
I would never want to get rid of my single family rentals if it weren't for management. I mean, not management, construction.
Mm-hmm.
Maintaining and working with these contractors and the codes and the making people happy and then wear and tear, I hate it. Right. If I never had to take another call from Home Depot in my life, I love you, Home Depot. John Gordon, you're a great guy. If I ever won the lottery, I'd buy like an entire store. Love Home Depot. I hate taking calls from Home Depot.
Mm-hmm.
You mentioned earlier you found out that a lot of customers wanted help with maintenance. How have you done that? Talk to me about that. Teach us a little bit.
Sure. Yeah, so maintenance
sucks.
It sucks, yeah. Construction sucks, especially, in California where we started.
No thanks.
That market, I can't tell you how many developers I've talked to have said, this is the last building I'm ever building in California.
Right.
Which is unfortunate because California needs more buildings. Yeah.
Right.
So, it's maintenance is one of those things that is just as society develops, as there's fewer people going to trade schools, fewer kids deciding I want to become a plumber, electrician, handyman, it's going to become more and more tricky to find excellent maintenance providers and vendors and have a reliable relationship and cost basis with them. So for us, what we learned was to build a vendor network that because we have national scale, we attract some of the best vendors around, and to really keep a quality control in place around this vendor network. So, one thing we do after every single maintenance work order, we have surveys go out to the residents and to the owner to ask, hey, what do you think about the guy that came out? What do you think about their communication? What do you think about the invoice? And we're constantly surveying vendors on that. And even as a retail investor, I think you could do that on a smaller scale. Engage your residents, make sure you are giving that feedback to vendors, pay them on time, treat the good vendors well, and invest in those relationships, because they're not always going to be there and they're not always going to be around. So that was a big thing. And then the other thing was on the technology side, all those offline interactions around the vendor, when the bids went out to vendors, when we got an estimate, when we sent someone out to the property, each one of those milestones in a maintenance experience is piped directly to a dashboard for the owner to see. So they can see everything from the tenant's photos and requests all the way through when the vendor arrived on site, when they submitted the invoice, and a timeline of those events. So again, giving access to information to increase confidence and clarity in property management.
The problem with some information, and in the multiple businesses I've run, you ask someone, hey, I need to know how many loans we did last week, and they send you a spreadsheet. It's like, really? Like, I don't want to go through your spreadsheet and tabulate it and start running formulas. I need a visual representation, right? Like I want a pie chart. I want a graph that shows today versus yesterday, right? Don't send me an attachment. I'm just going to delete it. Like, I don't have time for that. How do you continually develop your communication styles and techniques with both customers, right? The owner and the resident.
Right. Yeah. So, I mean, a lot of it is visual. So we built a, dashboard that has the pie charts and the graphics, and we try to, borrow best practices from other types of applications. So like, you think of like seeing information about the vendor visits. So we give a timeline format to show, okay, here's the date and time that the vendor was first given the work order. Here's when they showed up. Here's when they submitted the invoice. We allow people to kind of zoom in and out on properties. So you want your property manager to be able, if you have a growing portfolio or a larger portfolio, you want your property manager to be able to give you insight on a particular property and also portfolio wide.
Yeah.
So giving that ability to kind of zoom in and out on all those charts and graphics and filter by property or portfolio wide. So hopefully that answers that.
Yeah, it does. I mean, I'm always fascinated because I love my people, my investor friends, our audience. I love them, but I can't stand them. I don't like the questions. I don't like to answer questions, right? Like, I'm just just leave me alone. Let me do my work, right? And my wife would tell you that, it's like one of my best and worst things is I get in front of an audience and interact with my friends and everything, but I can't imagine having 15,000 people that want to call you and ask questions, because you're trying to be everything to everyone. And, just if I may ask you real quick, I mean, what are some areas that you feel like the customers are still not being served by the industry, and what are your plans to address that?
Yeah, good question. I mean,
that's what I get paid to do.
There you go. I think, first of all, we try, in the spirit of kind of not getting asked questions and not having to communicate as much, like, we try to give people preferences. I think most property managers, the best thing to do is don't try to be everything for everyone. Decide the type of, investor you want to serve. And for investors, make sure you ask your property manager, what are the other investors in your portfolio like? Like, are they mostly hands-off? Are they foreign investors? Are they people that live down the street from their property? Ask those questions of your property manager so that you can find out, hey, are my expectations going to fit with how this property manager serves his or her clients? And what I mean by that is, if you're the type of person that wants to be hands-on and, have someone to call every day and ask them questions, find someone who delivers that kind of service. It's probably, you know, a local operator with a couple hundred units under management. If you're the type of investor that says, I want to be focused on growing my portfolio and I've got a career or new kids growing up, you know, maybe you want someone who that you're going to be more hands off with, but you want them to be just delivering the information to you. So I think to get back to your question, what's not happening in the industry today, I think there's a big opportunity to create a more sort of seamless experience throughout the life cycle of owning a property. As an investor, you are really thinking about, you're constantly faced with these questions of like, when's the right time to sell? Do I want to buy more properties? Is my property performing at its best possible rate? And we live in an era where data is the crude oil of our society, right? And I think there's so much data that's about properties and about, you know, other properties out there that your property manager may have access to, or other folks in the real estate industry that could be leveraged to inform better investing decisions. So, for example, you know, how is my property performing among your portfolio of other properties in this region? Am I getting the best, you know, rent rates? Is my vacancy on par? So kind of benchmarking performance. As a real estate investor, that's super useful information, because then you can make those buying and selling decisions. The other thing is, you know, the history of the performance of your rental property. If you want to go sell that property in the future and it's an investment property for you, you know, why not leverage all that rental performance data and history, whether it's maintenance data, rent growth data, lease renewal data, and use that to power your sale price of your property. And I think that's another really kind of underused, I hate the word utilize, by the way. It's an excessive word. You just say use. An underused resource is that data.
I agree, dadgummit.
So I think it's all, I think data is a very underused resource that people have not tapped into that could really help real estate investors more. So I think we made a lot of progress in the last 10 years. There's a lot of people out there doing really intelligent stuff with data, but for the average investor, those listening to this, you know, they may not fully be aware of everything out there. So I encourage you to do your research.
Yeah, it's got to be user friendly too. I mean,
Right.
You can't. And I was going to take a break, but I'm actually just going to go ahead and dive into this now. I think what a lot of investors want to know is, do I cash flow?
Right.
Right. Like if I've got a DSCR loan and it was originally a 1.15 or a 1.2, and now my taxes have gone up, and now my rent's gone up, and now my insurance has gone up, and now if I'm paying a percentage of the rent to the property manager, now that's gone up. Like everything's gone up, probably except for my P&I. And sometimes that math, I mean, I find myself creating a new spreadsheet, and which one's cash flow better, which one's cash flow worse. Did I update that cell? What about that cell? Like, it is painful to dissect, and then, as you said, figure out what's next, right? Like, do I sell part of the portfolio? Do I refinance the portfolio with RCN Capital? Or do I raise equity into the LLC? That way I can keep the long-term note. And that, now I am rambling, but I want to talk about that, but I'm going to do it after the break. Stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-best.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. Tim Harridge here with Chuck. We're almost out of time, and I got to hurry up, so I'm going to talk fast. All right, 60 seconds. The top advice you have for investors, entrepreneurs, anyone out there listening. Doesn't even have to be about management or whatever. You got 60 seconds. Pour into them. Go.
My big tip is push the envelope. Do not hesitate to push a little bit harder than you think is appropriate in situations to get the questions answered that will inform you in your next move as an entrepreneur or someone looking to build a business. So many opportunities that come up that I've experienced in our business have come up because we've knocked on that extra door. We've asked the tough question when the time has run out to a mentor or to someone that we want to make a deal with. And, you know, it could be something like getting someone's number and start texting with them to develop a relationship. It could be, you know, showing up at someone's doorstep to bring them a gift or to have that conversation with them. Those are the moments that really will test you as an entrepreneur and someone looking to build a business, and will open up opportunities that may have otherwise just passed you by. So don't be afraid to push the envelope, and be persistent about it. Be consistent with it, because you will develop a great reputation and you will attract other great mentors and business people. That's my tip.
All right, that was great. And you talk about pushing the envelope. And recently, I did something I had never done before. I've got this portfolio of about $2 million worth of houses. And we've got about 50% equity, right? My blended rate on all my loans is 3.9. As you may be aware, that's not available anymore. And I'm looking at it now. The house prices aren't going up like they did. Insurance has gone up. Taxes have gone up. Rents are not inclining like they were. So now my return on my equity annually is starting to go down. Right? If we have a down year, I'm actually losing money on my equity. I'm not, and that's kind of at my stage of my career. That's what I'm looking at. Mm-hmm. And so I thought, I got all that equity, you know, $1 million worth of equity in just those houses. How do I get it? So I got on Chat GPT, and I just started modeling things out. I'd like paste that spreadsheet in and say, if I wanted to do this, what would this be? And I really started playing with it. That's what I love, you know, this language model that Chat's built. I can really interact with it and like have a fast, rapid conversation with someone that knows a lot more than me. Mm-hmm. And what we ended up doing is we raised $200,000 from a friend of mine that had been, I want to get investing. I want to get investing. I want to get investing. And I've been like, well, here, go buy this flip. I don't want to do that. Well, anyway, I just called him. I was like, tell you what, I did the math. I think you can make about 18% over the next 5 years. Give me $200,000 and I'll give you 10% of this portfolio. You just can buy a 10% interest in the LLC. And I sent him some stuff, and he called and was like, dude, this is great. Yeah, let's do it. Now he gets depreciation. He gets cash flow. I get some of my equity out. It's win, 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 win. And I love what you were saying. Like, that's what we as investors want. We want to be able to, we need help with foresight, mm-hmm. right? We need help with, do my houses cash flow, right? Like I would love to be able to like look at a graph and see percent revenue and average cash flow, and like, because now I'm a business person. I didn't used to be. I just started out as a flipper in a chuck in a truck, but now I want to see all these numbers. And short of Tim Harridge opening up Microsoft Excel and going to 95 different sources looking for them. They're not easy to find, but you're telling me that you do all of that for me and more?
Absolutely. I mean, we will present to you the current performance of your rental portfolio, the rental income rates. We're not quite there yet on predicting, total cash flows or pro formas of properties. That's the direction we're headed. That's how you truly get to that point of managing real estate like you manage a stock.
Hey, what's keeping you, man? I mean,
we're making our way there. Property management is 10 businesses in one.
yeah, you got more of those little PowerPoint charts you go through, like, click here, how's that work?
Right.
If you want to test that, you call me. I'll do it.
I will be. Because I think that's the next evolution of property managers, is to become more of that advisor. You want, part of the reason 70% of people self-manage their properties is it's the American way. It's the culture, DIY. I can figure it out myself. But, you're not doing your own banking and taxes. And that's because they've really developed those industries into really advisory type roles. So I think that's our vision, is to position property managers as more as real estate investment advisory.
I think that's a great idea. Like one of my stock accounts, like I can log in and it has like my contributions for the year, and like, am I on track to max it out with the IRS? And then it has like if you stay at this rate when you're 65, this will be your monthly income. And then it has like here's your holdings, and then it's like, here's your cumulative annual return. And for me, I can literally, sometimes I forget I have the app because I don't need to look at it that much because I have all the data in my head. I feel comfortable that it's doing well.
Trust.
So then when I log in and I can quickly flip through it, like the other day, God, man, I mean, we were up like 10% for the year before like the last 2 weeks. Now, I mean, we're still up 3% for the year, so it's like, fine, whatever.
Yeah.
But that's that fire and forget it portfolio, right? Like, I mean, it's just, I want that with my rent houses. Like, you just helped me come all the way. I do. I want that with my rent house. I want to feel like they're being watched after or taken care of or operated or managed, whatever we want to call it, in a way to where I don't have to worry.
Right. And that opens up expanding your portfolio and making decisions.
Because if you're confident,
right,
like this guy that just invested in that one portfolio of mine, he goes, I want one reassurance, Tim. I said, yeah, what's that? He goes, if we decide to sell these in 5 years, can you give me the option to go with you into whatever's next?
Yeah.
And I'm over here like, yeah. I mean, it's like literally I helped him get what he wanted, and now I've got an investor for my next big deal.
Well, that's a demonstration of the trust you've created in that transaction or that deal. Like you've demonstrated that you have the kind of know-how and knowledge and performance history that this investor is trusting you with that.
Because I modeled the appreciation.
Right.
I modeled the principal pay down. I modeled the potential increases in rent. I modeled the potential increases in taxes and insurance. A lot of people don't do that, right? I modeled a vacancy rate. I modeled maintenance. I modeled capital expenditures. I was really clear. I was like, this one is probably losing a little bit of money on the P&L, but when you look at the appreciation that it's getting and the tax advantages, because a couple of them were bonus depreciation too, so we're gonna get a good win on that. Anyway, the point is, yes, there's trust, and yes, there's focus, but there's also transparency, and I think that's what you're trying to build at Poplar, right?
Absolutely.
All right, so we're almost out of time. Why don't you just tell us about Poplar, where all you're managing, and how people can get a hold of you?
Yeah, so Poplar's in 17 states, 24 markets. We're in Texas, Austin, Houston, not in Dallas yet, or San Antonio, but we're making our way.
What's wrong
there.
with you?
We're trying to get there. We're actually growing a lot through purchasing property management companies. So if you've got a property management company and you're interested, check us out at poplarhomes.com or find me on LinkedIn. And we will give you a valuation for your business. It's a good time to be selling property management businesses in this market. We're all over the West Coast, California, Washington, Oregon. We're as far as North, South Carolina, Georgia. So all the major markets in those states. St. Louis, we just launched. And so We're Ohio, Columbus. So yeah, check out our
I
website.
really don't understand how you skipped Dallas on I-35, but we'll have to talk about that some other time. I feel offended, Chuck.
That's the next time, next episode. Maybe you're our client, our first client there.
Maybe I go roll up 6 or 7 property management companies and flip
There
it to
you go. There you go.
That's how I roll, Chuck.
Hey, if you can make it happen, we're here to pay.
To be continued. So, poplarhomes.com. Look up Chuck on LinkedIn.
Yeah.
Lots of markets, lots of states. Congratulations on running a customer-first model.
Appreciate it. Yeah.
So often, people out there, they have this idea to make money, and they forget what drove them to the idea to start with, right? And so kudos to you for staying focused on that and building a business around it. I can't wait to see your success continue.
Well, thank you, Tim. I'm going to be calling you for the next customer discovery call.
I'll take care of it. All right, everybody, that's it. We're out of time. I went overtime, but hey, thank you for tuning in. Thank you for being here. Thank you for sticking around. Remember, your net worth is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.